Welcome to MBANow. Here with us today is our Vice President of Commercial Real Estate Research, Jamie Woodwell, to talk about his updated commercial multifamily mortgage market forecast. Thanks for being here.
Great to be here.
So as our head economist for the commercial market here at MBA, what do you see for this year and in the year after?
So it's really interesting. Despite a lot of the economic uncertainty out there, fundamentals in commercial real estate and commercial real estate finance have remained very strong. When we look at our forecast for the coming year, we're anticipating about $500 billion of commercial and multifamily mortgage originations. That's roughly flat to the $504 billion that we saw last year and down a bit from the record of $508 billion back in 2007. On the multifamily side, we're anticipating that this year we'll see about $210 billion of multifamily originations from mortgage bankers. When you add in the smaller banks and thrifts to that, that'll mean about $270 billion of total multifamily lending over the course of 2016. When you roll all of that together, by the end of the year, we're anticipating probably about $2.9 trillion of commercial and multifamily mortgage debt outstanding.
So what are the main factors that you see driving this outlook from a demand standpoint?
Sure. There's been a lot of talk about loan maturities and the degree to which they're driving mortgage originations. When we look at past data in the history, we really see sales transactions as a much bigger driver of commercial multifamily mortgage originations. So looking at the year ahead, we had a little bit of a disruption to the beginning of this year, so sales down a bit in the first quarter of 2016 compared to 2015, but with low interest rates, with downward pressure on yields and therefore cap rates and therefore some support for prices, we're anticipating that the sales market is going to come in probably a little bit below last year's level, but still at a very strong clip, and that's going to translate into continued demand for commercial and multifamily mortgages through the remainder of this year.
So I guess one of the things which really defines the CMF market is the varied sources of liquidity. What are you seeing from a capital supply perspective?
Sure. If you look at 2015, it was a very strong year. As I mentioned, $504 billion, just below the $508 billion record of 2007. We're anticipating a lot of that continuing on this year. If you look at the different capital sources, life insurance companies, Fannie Mae and Freddie Mac and banks all had record years for originations last year. We're anticipating that most, if not all, of those groups will also have record years again this year. The CMBS market had a little bit slower year last year and started off the year this year with some disruptions in the capital markets, slowing down CMBS originations and issuance to start the year off. That's going to slow the overall impact of originations this year for CMBS. On top of that, you've got a variety of different regulations kicking in this year. So you've got risk retention that'll kick in December. Loans are already starting to be affected by that. Mm-hmm. So that could affect originations volume for the CMBS market for the remainder of the year. When you put it all together, though, there is a strong supply of capital out there for commercial multifamily mortgages.
Yeah, this is such important information for our members. Where can they go to get this and your other research as well?
Sure. If members go to MBA.org/research and click on the commercial multifamily tab there, you can get to our forecast, you can get to our quarterly data book and our other research reports covering the commercial multifamily markets.
Yeah, all really important stuff. Thanks so much for stopping by today.
Thanks for having me.